All right, guys, let me ask you this. Have you ever wanted to invest in the stock market but felt completely overwhelmed? Like, do you buy Apple, Tesla, or maybe Amazon? What if you pick the wrong stock and lose money? Don't worry, you're not alone. Almost every beginner investor goes through this confusion. But here's the good news. There's actually a super simple way to invest in the stock market without stressing over which stock to buy, and that's called ETF investing. In today's video, I'm going to break down what ETFs are, why they're perfect for beginners, the pros and cons, and how you can get started step by step. By the end of this video, you'll know exactly how to start investing like a pro, even if you've never touched a stock before. So stick around, because this might just be the easiest investment decision you'll ever make. Let's start with the basics. What the heck is an ETF? ETF stands for Exchange Traded Fund. And here's the simplest way to think about it. An ETF is like a basket of stocks. Instead of buying just one company, like Apple, an ETF lets you buy tiny pieces of hundreds or sometimes even thousands of companies all at once. So imagine you walk into a supermarket. Instead of buying one fruit, like just an apple, you grab a fruit basket that has apples, bananas, oranges, and even some grapes in it. That basket is your ETF. You don't just bet everything on one fruit. You spread it out. And that's the beauty of ETFs. They give you instant diversification. And guess what? ETFs are traded on the stock market just like regular stocks. That means you can buy and sell them anytime during market hours using apps like Robinhood, Fidelity, Vanguard, or whatever brokerage you like. Easy, right? Now, why should beginners care about ETFs? Simple. They take away the pressure of picking individual stocks. Let's be real. Most beginners don't have time to research company earnings, study balance sheets, or watch market news every single day. And honestly, even pros get it wrong sometimes. ETFs save you from that headache. Because instead of gambling on one stock, you're spreading your money across a bunch of them. If one company inside the ETF does badly, no problem. The others can balance it out. That's way less risky than betting all your money on, say, Tesla stock and then waking up one morning to see it dropped 15%. Ouch. Plus, ETFs are super affordable. You don't need thousands of dollars to buy into them. Some ETFs cost less than $100 per share, and with fractional shares, you can even invest with just a few bucks. This makes them beginner-friendly and stress-free. So, in short, ETFs are easy, affordable, and safer than individual stocks. That's why I always say they're the best way for beginners to start investing. Okay, so now that you know what ETFs are, let's talk about the different types, because not all ETFs are the same. 1. Index ETFs. These are the most popular. They track big indexes like the S&P 500 or the NASDAQ. For example, the ETF called VOO follows the S&P 500, which means when you buy it, you're basically owning a tiny piece of the 500 biggest companies in America. Apple, Microsoft, Google, Amazon, you name it, all included in just one ETF. 2. Sector ETFs. These focus on specific industries. Let's say you believe tech is the future. You can buy a technology ETF and instantly own shares of companies like Apple, Nvidia, and Meta. Or if you're into clean energy, there's an ETF for that too. 3. Bond ETFs. These are safer and give steady income. They're not as exciting as stocks, but they're perfect if you want stability. 4. Dividend ETFs. These are awesome because they not only grow your money, but they also pay you cash regularly. Imagine getting paid just for holding your investments. That's what dividend ETFs do. So depending on your goals, whether you want growth, safety, or regular income, there's an ETF out there for you. Now let's get into the advantages of ETFs. Diversification. With just one purchase, you get access to dozens or even hundreds of companies. That's instant safety against putting all your eggs in one basket. Low costs. Most ETFs have extremely low fees, known as expense ratios. This means you keep more of your money instead of paying it to fund managers. Liquidity. Unlike mutual funds, you can buy and sell ETFs anytime during market hours. Beginner friendly. You don't need to be an expert. Just pick an ETF that matches your goal and you're good to go. Transparency. You can see exactly what's inside an ETF. No secrets, no surprises. Honestly, ETFs give you the best of both worlds. The growth potential of the stock market and the safety of spreading your risk. Okay, now I've got to keep it real with you. ETFs aren't perfect. They do have some downsides. Just like stocks, ETFs can lose value if the overall market drops. They're safer than individual stocks, but they're not risk-free. There are thousands of ETFs out there, and picking the right one can feel overwhelming. But don't worry, I'll show you how to narrow it down in a minute. ETFs are for long-term growth. If you're looking to double your money in a week, sorry, that's not how this works. But overall, the pros heavily outweigh the cons, especially if you're a beginner. All right, so how do you get started investing in ETFs? Here's the step-by-step. Step 1, open a brokerage account. This could be Robinhood, Fidelity, Vanguard, Charles Schwab, or any other trusted broker. Step 2, deposit money. Link your bank and transfer whatever amount you're comfortable investing. Remember, even $50 is enough to start. Step 3, pick an ETF. If you're completely new, I always recommend starting with a broad index ETF like VOO, S&P 500, or VTI, Total US Stock Market. These give you exposure to hundreds of companies at once. Step 4, buy your first share. Just search for the ETF ticker symbol, hit buy, and boom, you're officially an investor. Step 5, hold long term. The real power of ETFs comes from time. If you consistently invest, even a little bit each month, your money can grow massively over the years thanks to compounding. That's literally it. Super simple. Let me give you an example. If you had invested just $1,000 in the S&P 500 ETF 10 years ago, today it would be worth more than $3,200. And that's without you lifting a finger. Imagine what happens if you consistently invest every single month. That's how regular people build wealth over time. Not by chasing the hottest stock, but by being consistent with safe, smart investments like ETFs. So to wrap it up, ETFs are hands down the easiest way for beginners to start investing. They're simple, affordable, diversified, and they take away the stress of stock picking. If you're serious about building wealth, don't wait for the perfect time. The best time to start investing was yesterday. Second best time? Today. So go open that brokerage account, buy your first ETF, and start your journey to financial freedom. And hey, if you found this video helpful, make sure to hit that like button, subscribe to Elite Trade Club, and turn on the bell so you don't miss future videos where we break down investing, trading, and money tips in the simplest way possible. Thanks for watching, and I'll see you in the next one.